What's going on, everybody? Michael Silva here. You're watching the Stock Market Brief, a show. Today's video is going to be quick, to the point. If you're new here, welcome to the channel. Make sure to smash that like button and subscribe to the channel if you haven't done so already. During this show, we go over intermarket analysis, technical analysis, go over various indices, commodities, etc. to get a good idea as to where the market might be headed next. Yesterday, we talked about the possibility, what to watch for if the market was going to continue rolling over. Today, we're going to be following up on that video, looking at some key levels and some indicators. Let's get into it. All right, everybody, welcome back. First things first, let's take a look at the dollar. The dollar broke out today. Not this crazy huge breakout by any means, but we have made progress above this key area of resistance. If you remember yesterday, we said we still have resistance around the 94 area, but this is a positive development in the dollar. So if we're looking at this from a flight to safety perspective, more people moving into dollars, it might be safe to say that we can see continued pressure down onto the S&P 500 as they've had this inverse correlation. We'll get into that chart here soon. What happened though when the dollar rises? Well, also commodities get hit. And today you can see the CRB index really fell from its 50-day moving average, and it's coming to approach its 100-day moving average right at around 206. And energy sector was the worst performing sector today. You can see here oil was a commodity that did get hit hard as well. We broke through that that support line that we were watching, started heading lower. This right here, the trend has changed. Okay, so unless if this gets fixed here fast, we have a high, a lower high, a lower high, a low, and a lower low. That is trending downwards now, and the moving averages are starting to curl themselves over slowly. The PPO oscillator down here is down below zero as well, and it is heading lower. So it does seem like we can approach this 200-day moving average on crude oil, so we'll continue to watch that. On the weekly time frame, the dollar has broken out of this inverse head and shoulders, but the week's not over. We have one more day. Okay, so we were watching this red box right here to see if it can break above it for the week. That'd be a positive development. The PPO has gotten above zero, and I will say that the PPO also on the monthly time frame, which I don't have here, maybe I'll bring that into the weekly recap, it's about to have a bullish crossover as well, and every time that that's happened the last 5 times, we've seen the dollar continue to rally. Okay, so it's breaking out of this inverse head and shoulders, potentially getting out of this little area of resistance. There's not much up here in this area to stop it from moving up into this target zone. So if that's the case, we might see more downwards pressure on energy stocks, commodities, etc. Okay, what's another thing that we talked about watching? Well, we talked about watching TLT, bonds, right? Bonds and the yields. Pay attention to what's going on there. Now, what I want to call out here is this change in trend. Okay, first off, you can see that the price has been heading, breaking down below the 50-day moving average right over here, and we came to retest it, act as resistance, 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 and then we started breaking down further. It wasn't up until around here where we said, okay, now it might be bottoming. Why? Well, put in a low here, a higher low, trending sideways, and we kind of formed out this ascending triangle. We're like, okay, now it looks like it might want to start breaking out. And that's what it did. It recaptured the 50-day moving average, and you could see it pull back within these short-term trends. Now we're above the 20-day, the 50-day, the 100, the 200, the 50-day just crossed above the 200-day. That is a golden cross, they call it. And it looks like clear skies, right? This is to me seems like we're starting to trend up. We do have resistance right at around 156, but this to me says, okay, there still might be that flight to safety. And we typically, the bond market moves before the stock market. And if bonds start to head up like this, yields, I should say, start to head down, which I don't have that yield chart in front of me. You can look at the TNX, but if those start to head lower, it might foreshadow potentially more selling across the indices. We'll see. It's very early to tell, and you'll know why when we get into the indices here. PPO, also bullish crossover in the making. It's not quite there yet, but if this continues, if this starts to press higher or starts to consolidate and then higher, this will cross over, and that would be a bullish sign. Let's get to the S&P 500. S&P 500 gapped down today and then rallied up higher. We tagged the lower Bollinger Band, it acted as support, and we rallied higher. We're still below the 20-day. Look this is why I pointed this out on this chart, the TLT. When it breaks down, it retested the 50, retested the 50, retested, but that was trending down. Here, we've been calling out the 50-day moving average is sloping up, the 100-day, the 200, and you can see it's been pulling back aggressively and then bounces up, bounces up, bounces up, bounce, bounce, bounce. So is this just another time where it's going to come down here and then bounce? It's very possible. There are a couple things that have been shifting. For example, the possibility of tightening, right, sooner than expected. We'll see if that's the case and if the market wants to, price that in. It's uncertain right now. To be more certain, we need to see a crack below this 50-day moving average and not this crazy move to the upside. Now, as we move along, you'll see that where did price end today in the SPY? Well, back right within this channel. Okay, so it's just been a crazy, crazy rally, right? We gapped down. We talked about this area as support, 436, came down, tagged it, bam, we just went right back up. And what did we say yesterday in the video? We talked about what to expect if we are actually going through a 5 to 10% correction here. Well, we said that expect large rallies, strong rallies. Well, this was a big gap down, and that was a very strong rally right back up to this area of resistance. So it's important to watch those key levels, okay? One thing to note here too as well, we're still within this channel, so it's anybody's game, all right? It could be the Bulls game, it could be the Bears game. We'll see who takes lead here. 5-day moving average is declining and heading lower. That can act as an area of resistance too as well. We'll see what happens with that tomorrow. Just pay attention to that 5-day moving average. If you're on the 15-minute chart, you can use the 130-day moving average. Dow Jones, look where it tagged. It tagged our area of support that we were watching. 50-day moving average in confluence with the lower Bollinger Band. We gapped down, we moved lower, tagged it, ran right back up. This is why it's important to watch for key levels. Clearly, they're acting as areas of support, and we've seen plenty that act as levels of resistance. This is somewhat of a little hammer candle. It does suggest, hey, yeah, we might be able to bounce up here further, but we need to get continuation. We need to capture back above the 20-day moving average, and we need to really now take out this previous swing high, okay? As it stands right now, we are still trending up, right? We tag the 50-day, we move up higher. We tag the 50-day, move up higher. 50-day, move up higher. Yeah, we got a little bit extended here, but we recaptured it. Same here. Boom, recaptured it. Now we're right back down to the 50-day moving average. All right, if we look at the 15-minute time frame, also you can just see its aggressiveness. Came down, filled this gap. I'll remove that tomorrow. Bam, we bounced up. We came back down. Bounce up, bam, down, bounce up, came back down. It's a chop fest. All right, this could be periods of distribution, so be mindful of that. Just look at key levels. 5-day moving average, declining, heading lower here too as well. And we have this area of resistance that there was previous supply at as well. And that's right at about 352, we're going to call it. Okay, Nasdaq on the daily time frame, Nasdaq 100. I want to call out Bollinger Bands have been very, very tightly contracted, okay? In the likes that I haven't seen actually in quite some time. I've tried going back to find out as tight this has been. Contraction leads to expansion. That does not mean, it doesn't give you a directional bias. Okay, you can't just say, oh, it's contracting, that means it's going to go up, or it's contracting, that means it's going to go down. So we got to watch for key levels. Today was, it's a bullish day overall. We gapped down and we pierced through this previous candle over halfway through. So that's a bullish type candle. We just need follow through on that. Overall context of the chart is still very bullish. The 50 sloping up, 100 sloping up, 200 sloping up. What is interesting is just the divergence taking place in the PPO. The momentum has been just dying off. Okay, we'll get into some other indicators here, but so far that is a decent development. We need to see what comes from this if we get some follow through. As far as the 15-minute time frame goes, where is price gone? Price has not gone anywhere. Where did it gap down to today? Right into our area of support. Support, previous resistance, right back into the middle of the channel. Okay, so this type of trading, if you're trading these channels, basically you can short when you get up to the upper range and then take profits back into the mid range, or you can buy long at the lower range and then take profits right back in the middle of the range. It's just, trading back and forth within this little box. You got to be careful, but it does make for good risk versus reward trades in there. As far as the price action now, it is below the 5-day moving average. That is declining as well. The PMO as well is curling itself over and it's below zero. So there's a couple bearish things here on the 15-minute chart. We'll continue to see how that develops. IWM is probably the weaker of all the charts. The Bollinger Bands were getting tightly contracted. We're starting to see them expand and prices starting to head lower. We haven't cracked down through 210. We were a low today of 210.68. 210 is a pretty relevant number, maybe a little bit lower than that. If we start cracking down through that, that's going to be a pretty bearish sign. We had a PPO bearish crossover. That's below zero and it's pointing down. This doesn't look good for small caps at all. So it's going to take one heck of a move, to get back up. Now, if you're like I said, if you trade the Qs like you're doing, from the top end to the bottom end, you can do the same thing technically with the IWM, right? This can act as support. We can capture it in, and we could, take profits in the middle of the range. Or if it goes to the top of the range, you can short it and then take profits in the middle of the range until something breaks, and then you can start changing that trend. You can see here big volume day. That could be a potential for more selling to coming in, or as we've seen, big volume days typically end up being somewhat of reversals. So you get this kind of exhaustion type volume bar, boom, right here, and then it goes up, right here, boom, went up, right here, boom, went up, right here, boom, went up. Okay, so that could be what we need to really pay attention to price action here in the next day of trading, as well as going into next week. Typically, option expiration weeks are typically bullish, but we'll see what comes from it. Now the 15-minute time frame cracked out of this channel, and we said that right here is that level to watch, that 210 goes down to 209, so 209 to 210, and we haven't quite reached that yet. If it gets down there, I would expect we can potentially see a bounce. If I drew a channel here, this could be a potential falling wedge, and it'd be on a positive divergence. So, I mean, yeah, we might see a rally. It could be a rip-facing rally, a face-melting I don't know what I'm trying to say there. Your face might get melted off type of rally, which we've seen previously. But keep in mind, the 5-day moving average is still declining and heading down south. Okay, let's look at a couple indicators. First off, the NYSE advanced decline line cracked, obviously, through the 50-day moving average, pointing lower. It's below those Bollinger Bands. RSI is below 50, and it's been diverging. That's not a good sign. That's more of a sell signal. Now, this can revert. Okay, it can revert back, and it can revert back fast. So pay attention to that. If that's the case, then this is just one of those little blips, right? The S&P 500 right into the 50-day moving average, and then it heads right back up. That's not the case right now. If we start taking out this low, that's a little bit of a concern for the S&P 500. The NYAD, this is the NYSE Advanced Decline volume cumulative line here, and this thing is really breaking down, just heading completely down south. RSI is getting a little overextended to the downside, and you can see here the last time that we're really overextended was back here during the pandemic collapse. So, and that was when we crossed through the 200-day moving average too as well. But the price action is still, it's still up here. We're still hanging out pretty high, so let's pay attention here. Be mindful of this. That is, it's dangerous times. BPNDX, this is something that I like to use to see oversold or overbought conditions. I just wanted to call out that the Nasdaq 100, this has been heading lower, but we had a decent day today, but it still has the potential to head down lower still as well too. So today's move in the Nasdaq 100 or the Qs, it could be a potential head fake. I don't want to discredit its bullish move and its bullish price action because it was bullish, but just take note that it needs confirmation, it needs follow through in order to actually be bullish. If we look at the Nymot, this is where it's going to get pretty interesting. So this is the Nysey McClellan oscillator. A couple things to pay attention to, and then I'll get into my closing statements. This right here, it's getting overextended. However, what you want to watch for is a big overextended reading, like 300. Okay, and I'll get into why. When it gets down at this level, first off, that's pretty overextended, but you can pair this with the summation index. If the summation index gets below 0 and this reaches down to minus 300, I'll make a separate video on it. This is something that I learned from, what's his name? Who did I learn this from? Oh, man. Timothy Ord. I believe that's who I learned this from. Sorry. I'd have to look into that, and if I make a video about it, I'll talk about it more then. But he did point out that if the Nysey McClellan oscillator gets below 300, as well as the Nysey summation index reaches below there, it does create some turbulence in the market, and we've seen that before. I don't have the charts to show you, but we're not far there. And then if you bring up the Nysey McClellan summation index, as it stands right now, we talked about this in previous episodes where this has been going up, this has been going down, it's been diverging. We've seen it a few other times where this has happened. But when it gets to this 0 level, the market can be very, very, very much at risk. Okay, so it's not far from that. This was curling up and everything looked good. It curled right back down and is heading straight down to 0 right here. So pay attention here. This could be an early warning signal where we'll look back at it and be like, of course, right? Last time it was really at this 0 level was right here, and then the market, you can see that it was diverging and then it headed lower, and then we started to curl right back up and bounce, and then it once again came back down and retested it. This one previously was the pandemic crash. So what's interesting to watch here, like I said, if we start getting some more pressure, which by the way, this is an overextended reading, so I wouldn't be surprised to get a bounce, but if this heads lower and this crosses down through zero, buckle up, because the market can start to see even more panic than what it's been seeing on this, crazy 1.5% movement to the downside. That's all I got for you guys on today's video. Hope you're having a wonderful day. It's my birthday today, so I am going to go relax. See you on the next episode.